All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. Happy Friday, everybody. It is, what day is it today? The 9th, December 9th, 2022 on a Friday, 9:02 Eastern Standard Time this morning. Thanks again for joining me. Let's go ahead and rock and roll. Bottom right-hand corner of your screen, there's a little black logo. Click on that, turn on notifications, subscribe to our channel. Make sure to like our videos. Really do appreciate it as always. And if you don't like missing any of our morning notes or videos that we do, make sure to hit that notification button so you do get first dibs on the new videos that do come out. All right, let's go ahead and first start with the PPI number. We knew that was coming out on Friday. Here it is, US November Producer Price Index rise 0.3% month over month. The estimate was 0.2, so that's higher than expected. Producer price year over year, 7.4% year over year versus the estimated 7.2. That's what caused futures to fall this morning. We were as high as around 39.90, let's call it. We are now trading at 39.54, so around 40 handles, 36 handles or so. From Bloomberg, this came out today as well. PPI confounds expectations, but margin pressures fall. It says, whoops, so much for downside risk to the PPI. The core reading jumped 0.4% above any forecast in the Bloomberg survey. Headline was also higher than expected, and all rather suggests that the glide path from peak inflation might be bumpier than hoped for in some quarters. I know that I wasn't the only one leaning to the downside on this one, but it is a little surprised to see an abrupt reversal in equities. Frankly, I'm a little surprised that fixed income hasn't moved more. Fixed income being treasuries or bonds, and you could see a little bit of a pop, but not much. Again, government bonds still in demand. Been saying that. Again, bonds are going to bottom before equities, and then equities bottom before the economy. That's usually the case. So again, not seeing a huge move in treasuries in terms of selling off of U.S. treasuries. But again, we're trading right now at a 3.5% on a 10-year. We were at 3.46 this morning before the PPI number. So again, not a ton of moves. Again, 40 basis points spike, but nothing crazy. It says here, I guess one bright spot for future inflation prospects is that the retail trade services, a proxy for margins, again, profit margins, always key. This is why people get laid off. People always ask, how come the market likes when people lose jobs? Because labor costs are such a big part of that expense report or that balance sheet. Again, the more workers you have, that's the more salaries you have to pay, the more bonuses you have to pay. And again, that structurally brings down the margins or profitability for companies. And again, shareholders, just like you, if you're watching this, or fund managers, again, their interest is not on labor. Their interest is maximizing profits on their companies. That's every company you invest in, period. They're not there for any kind of societal issue where, oh, we're just going to employ people for the good of the society. It doesn't work like that. It's profit and loss, period. And if there's less profit margins, then you're going to have less employment. Less employment leads to less inflation. That's the case. So again, all of these layoffs we've been seeing, the highest unemployment claim report since February. So that's telling you that we're starting to see that labor is coming down. It's still a strong labor market as we've seen wages go higher. But again, it's the same thing. Again, we just don't have enough workers. That's kind of the issue here. So again, labor participation is down. So again, if you have margins pressures going down, again, that's going to go ahead and relieve any kind of inflationary pressures moving forward. But again, this inflation report is still too high, but is still lower on a basis that we've seen continual. So again, if we can go ahead and take a look at PPI Fred, let's go ahead and bring that up. This is the St. Louis Federal Reserve. So again, we're going to go ahead and get to the PPI. Let's go ahead and let's see. Let's go PPI, Producer Price Index. We'll go to total. And I don't know if this is updated as of today, but I'll go to a 1-year period. And you could see that we are, since June, technically inflation has peaked. We've seen that oil prices have gone to the break-even level. Now we had Putin with some headlines. I'll read that here in a second. But for the most part, we are seeing, at least on the producer price index side, that we are falling gradually, just not fast enough. So again, that's what creates expectations. Let's speak a little bit about expectations on this report. So again, the PPI came in above estimates on both headline, which is the top 7.4%, 7.2, and core. Still falling on a year-over-year basis, but upside surprises don't bode well for CPI. Again, you could see as we've been rolling over. So again, The trend is there, but just not enough. So what does that mean for the Fed? Well, we don't know until we have consumer price index, which will be on, let's go ahead and take a look at that. Forex Factory. Oh, I already had Forex Factory up. Let's go ahead and take a look here. Until Tuesday, 8:30 in the morning, CPI. We have that on Tuesday morning. Wednesday, we have FOMC. Thursday, we have core retail sales. And Friday, we have flash PMI. So Monday, not a bunch going on. But again, Tuesday to Friday, big, 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 big. Why Friday so important? OPEX, options expiry. So again, that's the last one of the year. I'm expecting a ton of volume. It's going to be a big one. This week, in terms of the market, at least on my side, SPY calls didn't work. We got pretty close in terms of overnight. We got minus 50% as it came back to yesterday. But again, I think we're just going to run out of time as I still have the 400 calls for this week. So I would need a big pop. Let's see if we can get there. I mean, we were down 50 yesterday, but again, a tough trade this week. Didn't do much, at least that because of the week ahead, but we were playing momentum as we were moving forward. Let's go around the horn. Dow futures down 86, NASDAQ down 37, S&P down about 0.29%, Russell down about 0.47%. Crude oil is up about 0.55%. We'll take a look at the macro together. And let's go ahead and expand crude oil first. And again, we could see exactly as a proxy of inflation, how energy has tanked since then. Again, the peak from 130, and here we are, 65 on the weekly seems to be very big support. That's your 200 on the weekly. That's the bounce level that we had on S&P futures. So again, something to think about once you get to around 65. If we get lower than that, that would be not good because that's more deflationary. That shows that demand is waning. We'll see how demand is waning next week on retail sales, especially with the holidays. Taking a look at S&P 500 index futures. We'll go ahead and take a look here. I had to redo my wedges and my trend lines because it keeps changing. So again, I still have that yellow wedge still showing, but again, I went ahead and did the green one here. I went ahead and updated this to give us a new route. So again, still holding around 39.50 on S&P. Again, we're right down about 36 handles from a hotter than expected PPI number. I would expect us with that number, if you would have told me about 30 minutes ago, I thought it would be at 3,900, but 3,900 is a key level right now. So again, I don't expect after this PPI number much today because everything is for next week since we have the gauntlet running. Gasoline futures up 0.14%. Gold is up 0.41%. The dollar is basically flat, 104.81. Let's go and take a look at the dollar together. And again, still looking for that 104 level. We're at 104.82, kind of putting around 105 these past couple of weeks. That's a level we've been watching for a while now if you've been watching the morning note. In terms of copper futures, 0.7% to the downside, 385. Again, we've talked about how copper is so important in terms of the growth of the global economy. Dollar yen, that's down 136.03. Euro dollar down about 14 pips. Again, we still want 106. That's what we're looking for continuation as Euro and S&P are correlated, at least right now. Bitcoin futures up about 33 pips, 122.72. So again, a weaker dollar is helping at least. Bitcoin futures 1710, 105. Again, still hovering around that 17,000. Not much left to report. 1268 on Ethereum, 0.67%. To the downside. And in terms of the volatility index, right now it is up 2.38%. It was down yesterday, as we know. But again, we still have that trend line here on the daily around 24.6. We'll keep that alert going, and we'll go to 10-year yields to kind of go around the horn in terms of macro. Again, holding that 100-day moving average on the daily. We still expect around 31.43 if we get more recession fears or anything like that, because Treasury bonds, again, like we said, are the first to bottom before equities and then the economy. That's usually how it goes. So again, I expect bonds to still get bought as we still get more slowdown, recession, severe recession fears in 2023, but we'll see where we go. Netflix posted this today. Cowen, top idea of next year, 2023. Netflix, high beta name. Even Wells Fargo upgraded it. And again, you could see kind of holding on right here near that gap fill of 328. I went ahead and told our members or newsletter recipients in our Discord about Netflix. And I said, again, if you held Netflix to around 170, 162 from the bottom, you're right now around 310 or 320. I think this was when I wrote it, or 310 or so, let's just say. This would probably be a place to take some profit. Cowen says continue on. You got another gap to the upside. I think taking some profits here isn't a bad idea on a Netflix. Maybe leaving some running. You take your original investment, you leave some profit, or whatever works for you guys. But again, right around 330 seems to be that gap fill. What happens there, we'll see. But hey, you got another one right here too, right around 507.02. Would I buy Netflix here? Let's go ahead and see the CPI report next week and see what we do. Again, a lot of positioning I'm expecting as the week unfolds, as the day unfolds going into next week. And you'll have one more day for the S&P if you're looking for any kind of positioning, because Monday, not much is going on. It's a Friday, not expecting a ton of questions. Again, PPI came in worse than expected. We're now at 39.47. Let's see where we go from there. But again, even with the CPI number, it wasn't really that big of a fall or at all. I mean, we were up about 100 points on the Dow this morning. But again, that flipped, as you can see here on the hourly. Let's see if I can get this going. The hourly chart. Happy Friday, William. Thank you. Right now, okay, see the hourly. We're right near 4,000. Now we're at 50 points away. So let's see where we get. Hey, you as well. Thank you. Have a great weekend. Lulu, that's right. Lulu also, in regards to Lululemon. Oh, give me a second. Oh man, this is not making life easy. All right, here we go. In regards to Lululemon, there was a headline out that their inventory is in excess of $1 billion. And we talked about this. This is the next sign of deflation when inventories start building. Remember these apparel companies and these retailers, these cyclicals. What they did during the pandemic when there was so much demand and the supply issues, what did they do? They started trying to get more and more supply. Remember, it's easy to make supply rather than create demand. Creating demand is a little more difficult. And we talked about this earlier this year if you guys want to talk about inflation. So again, as the inventories like a Lululemon, maybe Nike's getting some more inventories. We don't know the comparables yet because I don't have their earnings on Nike, the most recent one, at least in front of us right now. But in terms of inventories, that is so key because if inventories are building and demand is softening, then you're going to start getting lower prices. We're seeing that in gasoline. We're seeing that in crude oil. We're seeing that in most commodities. How do I know? Because it says it here. Let's take a look at the commodity prices. We've done this before. Let's go ahead and go to futures. And then we'll go to, let's see here, performance. This is FinViz. And we'll go year to date. And here's the relative performance year to date of commodities. Lumber down 64%. Oats, coffee, cotton. Let's see, canola oil. Gasoline. Gasoline is actually red for the year to date. Crude oil down year to date. Gold year to date down. Silver, cocoa is up slightly. But again, some of the big boys, natural gas, orange juice, heating oil, soybeans, rough rice, live cattle, all that. That's still green for the year. But again, even with a restrictive economic situation in terms of the Fed, higher interest rates, a soaring dollar, trying to beat inflation, you can see how things have changed. It's just a reversion of the mean. That's really it, guys. You really shouldn't expect, anything different. In terms of Lulu, again, their inventory build is what's showing, and it's kind of showing a little bit of a red flag in terms of deflation. But again, if you're having deflation, I would say still the best bet is still Treasury bonds, at least moving forward. We talked about TLT moving forward. TLT, we'll go ahead and take a look here. It's down a little bit this morning, but we'll go ahead and bring up the daily. I went ahead and talked about this on the investment club and talk about certain levels. Like 119.51 is my level I'm looking for. There's a gap to fill here at 111.50. That's a $2 move from where we are. Not exactly worth trading right now. 114.34 is probably the best TP1. That's right near the 200-day on the daily. But really what I'm looking for is 119.51. I have no issues owning some government bonds, paying about 2.28% in yield. I appreciate your PPI analysis. Not many people can do it after the facts. That PPI higher than expected, but some still stocks going up. Yeah, again, the PPI, I think, again, we're still showing downward trend, at least that, but not fast enough. And again, everything in life, guys, is really about two things. It's all about expectations being one and perspective. Everyone has a different perspective. Everyone has different expectations. Just like when you have expectations for an earnings report or what have you, this is what the reality is. So again, if I told you that PPI was hotter than expected and we ended up at 39.50, more than likely you'd probably take it if you were long. I am long, so I'm probably going to get hit. But again, this is the name of the game. Didn't have too much risk on the board at least. But we caught one trade this week, not the best. But again, next week we go ahead and hit it hard. It was just a chop fest this week. This has been your week this week. Again, you could see starting Monday, And here, so we went from Monday midday around 40.13 to around 39.50, about 60 handles. Not exactly the best tape to trade, but that's where we are. But in terms of PPI, I mean, that's where we are currently. Again, higher than expected, but again, still on the downward path. We still got CPI next week. Let's see how they do. Maybe that lowers their expectations of PPI coming softer than expected. And of course, we got the Fed for the end of the year, the last one. Remember, they're still in a blackout period. They cannot speak until the FOMC. So after that, prepare for Fed speak. This is going to be fun. Let's go to NVIDIA. NVIDIA, well, let's go ahead and expand this on the daily. So I kind of give us a little bit more of a roadmap. And you got that 200-day right there at 175. So again, I may not want to go long here on NVIDIA or doing anything with it until that breaks above that. But if you go ahead and take a look here, you still want to get to that 175 level. That's really the only level up. Now, in terms of downside risk, if you break 160, you could do the 150 puts because you have the 100-day right there as possible support. We have tested it back in November, but it's still been holding up. NVIDIA is actually not looking terrible, to be completely honest, but again, that 200 MA overhang is a problem. Let's go ahead into TSMC, Taiwan Semiconductors. Taiwan, let's see, Taiwan. Let's see, Taiwan. Let's see, TSM. There you go, TSM. TSM, hello. All right, TSM, again, another semiconductor play. You have the 200-day right here. I think Warren Buffett owns stock in TSM. There is a gap to fill here, guys, so just be very careful. You got two. What I want to go and buy here, if you get above the 200-day, yes. But until then, no, because you could just chop around. And we're not sure yet. We just have to wait. Hey, we just talked about Netflix. That's right. Netflix, I'll go ahead and repeat it. Again, you still have that gap to fill. I said that on Twitter. Again, I have no issue with Netflix if that's the case. But again, you're starting to get to a point where you want to take some profits, at least short term. You're right there at 330. Again, you can go ahead and leave. You take away your original investment, leave your profits, let that run, possibly for this next gap fill 2-3 years down the line if we get there around 500. Again, but that's really the only edge you got is that gap fill right around 330. Not much to go by in terms of right now. You're at 310. What? Maybe a $20 move. Not against it if you're trying to play calls, but again, a nice move on Netflix. But again, 330. You'd have to look for next week trade for 330 calls. Maybe that's worth a shot. Let's go ahead and see what we get. I'll be watching it very closely. Have a great rest of your morning, guys. We will see you guys on Monday for the morning note. And have a great weekend. Go Cowboys. And we got some World Cup going on today and tomorrow. Have some fun, guys. Enjoy yourselves. We will see you guys on Monday. Cheers.